Hello, I'm Angie Austin with Oil and Gas 360. Welcome to the 2015 EnerCom Oil and Gas Conference, the 20th conference. We're being joined this morning by David Schulte. He is the President, CEO, and Director of CorEnergy Infrastructure Trust. Good morning, David.
Good morning.
So I understand this is your first conference.
We're very happy to be here. We do have an energy focus for our company, and so the opportunity to be in front of this many investors is special for us. We're a pretty young company.
So you are unique, definitely, as I've been doing research on you. And what's your general opinion been? Have you had lots of meetings? Has it been successful? Have you met a lot of people?
We've met a lot of folks here, people who aren't familiar with our story, so that's really important to us. So we get our message out to people who aren't familiar. We are an income vehicle, which is in the energy sector not that common. They're MLPs, but we're a little different than that.
Well, let's get into a little bit of your story and a little background. CorEnergy represents a relatively new investment vehicle in the energy space, as you mentioned, an REIT that holds energy infrastructure assets. A lot of investors are more accustomed to seeing an MLP structure in the oil and gas infrastructure space. So can you talk about the difference between the REIT structure versus an MLP? What are the advantages of the REIT structure as an energy investment? So that really gets into your story.
Yeah, we think we combine the best attributes of REITs, utilities, and MLPs in a package that's easy to own for investors. We have a 1099 tax form like an REIT would or a utility would. Yet we have stable cash flows from an exposure to energy sector through the investments that we make. An important difference between us and MLPs is that we don't operate the business. MLPs would.
Yes.
And so we let operators keep control of their assets.
I see. Interesting. All right, let's talk a little bit about portfolio. CorEnergy held $460 million in assets at the end of Q1. Late in the second quarter, the company acquired the Grand Isle Gathering System for $259 million. So can you give us a little snapshot of the total CorEnergy portfolio as it stands today?
We have $700 million in total assets today. We have exposure in upstream energy, midstream, which is storage and transportation, and even some downstream. We have a natural gas pipeline that's a utility that delivers gas to end users at one end of the spectrum, and then we have the gig system we just bought from Energy 21 at the other end of the spectrum. All of our assets share in common this characteristic. They're hard assets with long lives, and they can support a long-term cash flow stream, so we can pay reliable dividends to our investors, and that's true whether it's upstream, midstream, or downstream in our view.
Excellent. All right, let's further delve into the portfolio topic. Can you give us a rundown of the economics of a typical asset in the portfolio and talk about why it fits the business model?
So by trying to target investments that give us a reliable dividend stream, we need to have a pretty long-term view about the duration of the assets that we're investing in. And as it comes to, for example, upstream assets, more the focus of this conference, we spend a lot of time thinking about the reserves and the reserve potential so that the utilization of our assets can have a very long life, well beyond our initial lease term. But we want an initial lease term of 10 years or plus so that we have a very visible, reliable, stable dividend stream at the outset of a lease we would make.
Well, that's a great topic. Let's talk about the dividend. The company announced in your 2Q release your intention to increase the annual dividend to 60 cents. That's an 11% increase. And you're guiding further annual dividend growth, 3 to 5%. Is continued dividend growth sustainable when you consider the present down cycle in the energy market? So you like that one. You're smiling. That's a doozy.
That's a good question, and we believe that our goal is to not raise our dividend unless it's sustainable. In that regard, we're like many of the lower risk MLPs or utilities that would have direct visibility on cash flows that will support their dividends from long-term contracts. And in our case, we pay our dividends based on our base rents, the base lease terms in our contracts, with upside from what's called typically in the industry participating rent. And participating rent can take many forms: volume growth over a threshold, or price and revenue growth over a threshold. So we believe our an investment in our stock today would give an investor a very solid baseline dividend plus exposure to upside, and this is a good time to start looking to make an investment if you believe we're in the trough of a cycle. So we believe it's a good time to put money to work in our stock and for us to put money to work in the sector.
All right, let's get a little bit more into assets. Following the July expansion of the company's credit facilities, total liquidity available for investment was approximately $119 million. Do you have other assets in mind that you're targeting for acquisition right now, and which kinds of assets do you want to add next?
So if I break down our portfolio, most of what we own is somewhere between $50 million of cost and $250 million of cost. That makes us a relevant financing source for many small and mid-cap E&P companies. And so we're looking at many transactions and assets that are in that value range, and the functions they provide are the boring, mundane pieces of capital that are necessary for the production of energy, but they don't create a lot of value for that upstream company. We think that their return on invested capital is better if we own those assets and they still run them, they operate them. And that means we're looking at companies today that have perhaps some borrowing-based redeterminations upcoming, there's some stress in their capital structure, and they really need to hone in on cost. So our counterparties are most likely going to be companies that have good long-duration opportunity sets, but who don't need to own all the assets that support that, and we're a good partner for them.
Excellent. All right, finally looking ahead, Dave, what's your view of where the oil and gas industry will be a year from now, and what goals do you have for CorEnergy for 2016?
I have no crystal ball on that, other than, as investors are overcoming the shock of what's happened to them in their energy portfolio, the cost of capital for energy companies has gone up. Volatility is higher, risk assessment is more challenging, and for that reason we believe that it's going to be capital formation activity for small cap E&P companies is going to be more challenging. Our position in this market is that we provide them with capital and they provide us with a reliable part of their cash flow stream that we can get access to different markets for. So, frankly, we think for us this is a great time, and it's some of the challenges in the energy environment are what's creating that good time for us.
Interesting. All right, thanks, Dave. Dave Schulte, he is the President, CEO, and Director of CorEnergy Infrastructure Trust. I'm Angie Austin with Oil and Gas 360 at the 2015 EnerCom Oil and Gas Conference in Denver.